A few years ago, I was at an industry conference meant to promote financial wellness. Representatives from online lenders, banks, and credit unions were in attendance. After listening to a panel of everyday Americans who took out loans from an online lender, one credit union executive said that she thought that people aren't going to credit unions for personal loans because the credit unions can't afford to advertise as much as online lenders. Is that true? Is it really as simple as that? Would all payday lenders and online lenders go out of business if people were more aware of credit unions? Here at the Yukon project, we track hundreds of different lenders: banks, online lenders, tribal lenders, payday lenders, and credit unions. We look at their APRs, loan amounts, policies, and who they lend to. In this video, we're going to answer the question, should you be borrowing from a credit union? First, what exactly is a credit union, and how are they different than banks? A credit union is a member-owned, not-for-profit cooperative financial institution that provides banking services. Because credit unions are owned by their members and not by shareholders, their mission isn't to generate profit. Instead, their purpose is to benefit their members. They do that by providing higher savings rates, charging fewer fees, lending at lower interest rates, and emphasizing community-focused customer service. In the United States right now, there are approximately 4,000 credit unions. As you can imagine, most of these are small organizations, and that is where their disadvantage comes in. Because many of these organizations are small, they might not provide the breadth of services or the most advanced technology. Going back to my story about the credit union executive, we have to ask, is it true that the only thing keeping people from always borrowing from credit unions is that consumers aren't aware that they exist? Would the rest of the lending industry go out of business if people just knew about credit unions? Is marketing really the problem? The short answer is no. And the executive got that answer when she stood up and asked the panelists of everyday Americans why they hadn't just gone to a credit union for a loan. More than one of the respondents simply said, "I tried, and they denied me." Credit unions are like any other lender in that they need to make sure that the money that they lend out is paid back. It doesn't take a JP Morgan to see that no lender could stay in business if borrowers failed to repay their loans. Forget profit. A single defaulting customer could wipe out the interest revenue from 10 or 20 good-paying customers. So credit unions still have to worry about the risk of borrowers failing to repay their loans. Of course, one way that credit unions can do that is to only focus on long-term members. Loan officers might look past a person's imperfect credit if the applicant has been with the credit union for a long time. Maybe. The next big question is whether a loan from the credit union would always be cheaper than one from a bank or online lender. As we track the APRs of various lenders, we have found that credit unions' lowest APRs are rarely any lower than that of banks or prime online lenders. And in some cases, they are higher. So if you are in the top 10% of applicants, there's no guarantee that your credit union will give you the best deal. On the other hand, credit unions' top APR rate is generally lower than other lenders. So if you have middling credit and can get approved, you might just get the best deal from your credit union. The other advantage of many credit unions is that they have a wide variety of lending products. Some have microloans that can just be what you need in order to avoid a payday lender. Some have loans designed to help you build your credit score. Many of them have secured loans where the collateral is money in your savings account or a certificate of deposit. And some have personal lines of credit if you need more borrowing flexibility. I say some in all of these cases because it varies widely from one credit union to another. But if you're looking for borrowing options, credit unions would be a good place to look. True to the reputation that credit unions have fewer fees, most of them do not charge an origination fee or an application fee on their loans. I wish I could say the same about late fees and NSF fees, but less than half of the credit unions I track even publish anything about their other fees. All the ones that do indeed charge these fees, and they can be higher than the fees that online lenders charge. This lack of information is actually a wider problem. Credit union websites are often not very transparent. They are much less clear about their APR ranges, their minimum and maximum loan amounts, and even their lending policies. It's possible that they expect you to walk into one of their branches and talk to a person. I'm not sure. But on the whole, their websites do not share as many of the details as they should. That makes it hard to shop around before you apply. And shopping around is really the most important thing you can do. Every lender, including credit unions, have different algorithms for deciding who to approve, how much to offer, and at what rate. The only way to be sure you're getting the best deal you can is to check with a range of lenders. At the Yukon project, we've tried to make shopping around easy. If you visit our lending marketplace page, you can select the purpose of your loan, the amount you need, and your credit score range. When you apply to one of our featured lenders, we will check your rate with up to 40 other lenders behind the scenes. Our partners use a soft credit check, so applying won't hurt your credit score. We will show you all of your approved offers, so you can be confident you're getting the best deal you can in your situation. Best of all, you have no obligation to take one of these loans. If they don't give you the best offer, don't accept the loan. To sum up, credit unions might be a good fit for you if you are an existing member but only have middling credit. If you are looking to build your credit score, if you might want something other than an unsecured personal loan, and if they offer you the lowest interest rate. If you found this information helpful, please like this video and subscribe to our channel. Doing so informs the YouTube algorithm that others would find value in this video. It helps us out by helping us find a wider audience for this content, and we appreciate your support. Thanks for watching.